the other, even if you're not married. So even if you were unmarried living together, you can't change that in a will. It's going to be, if you're joint tenants, then it just goes to the other person. So there's certain ways that you want to like set up the ownership of the property to make sure that it's going with what you actually want once you die or once the other person dies. Because Utah's a little bit different with that.
Good to know. We definitely should have somebody that specializes in trust do a quick deep dive in how all their ownership should be. And we have had Jeff Braylio in the past, who's definitely an expert at that. And so
we actually had our trust set up a few years ago, and I found another guy that I like, that I had him do a bunch of work on it, and he restructured all, because I personally have a bunch of different companies, and so they restructured all of it and how it's set up. So you really have to talk to an attorney that knows what they're doing, and then involve the CPA. That's another thing I see a lot, is attorney may make a decision and put it in the trust a certain way, but they're not consulting with the CPA to go, okay, what's your take on this? Because in the end, you don't want to die and have half of the estate go to pay tax. You want it to be the best benefit for your beneficiaries. So you have to have a plan. Yeah. So there's lots of planning that goes involved in that, for sure.
do you remember the line that we came up with?
Oh, the line. Yeah. So you have to have, now I can't remember exactly what you said, but basically you need to have the most important lesson.
No. Say the line. Find
The
a
line?
specialized real estate accountant,
yes.
not a Joe Schmo CPA.
Yes. Find a specialized real estate consultant, not a Joe Schmo CPA. You have to have somebody that's got experience. CPA, and my most ideal client will work with a CPA and an attorney specializing in trust and estates, plus an attorney on corporate law, plus a financial advisor. And if you have all those people kind of seeing what the best benefit is for the client, then you can make a plan for the future. So absolutely find people that have the expertise.
Yeah, I find
Really overwhelming to hear that.
it sounds expensive.
It does.
in my life, I've gone from being a very large introvert to having a very good capability in construction. And what I need is definitely more of that, the specialized tax attorney, the specialized financial advisor. And as I get better and bigger, I'll definitely keep that in mind and grow. But it's just so hard when you're starting out, and it's like some days you work and it's all about making bread,
Yep.
it's just get the bread from, their pocket to yours in a way that you can feed your family.
Yep.
And then you learn these other things, hopefully from things like this podcast and not bad real world experience.
Yep. So a quick story about retirement planning. I had a client that called me one day, and she's like, hey, I want to talk to you about something. She'd been a client for 5 years. Every year I just got a couple of real estate K1s with a little bit of loss on them. She had some Social Security and a little bit of a state pension plan, like super low income, really low income. And so she calls me and she's like, hey, I'm getting worried about my required minimum distributions on my IRA. Because when you're at a certain age, 72 years old, that you're going to have to start taking money from your IRAs. And I said, your IRA, she hadn't contributed to anything in the 5 years. So I didn't even know she had an IRA. So I said, what IRA do you have? And she goes, well, I got an IRA that's sitting there, and the required minimum distributions are going to be huge, and I'm afraid of the taxes. I said, well, how much do you have sitting in there? She's like, 2 million. I'm like, what? There's 2 million sitting in an IRA. And she's like, yeah, so I'd like to kind of come up with a strategy. And I'm like, oh my gosh. So if we would have taken the last 5 years where your income was $10,000 a year and been rolling over into a Roth, paying super low taxes, we could be making a plan. So what we did is we used real estate and we used her low income. So we set up a plan for her to say, in 2023, you need to be involved with a cost segregation or buy a property. So you'll pull money from your IRA, you're going to buy into a property, we're going to cost seg the property, then we're going to roll part of the IRA into a Roth. And anyway, we came up with this plan to use real estate and cost segs over the next 3 years. And then over the next 10, we were going to pull out almost all of her Roth or all of her regular IRA, roll it into a Roth. And her total tax for all those years were going to be only 20% a year. So we kept really low rates because of how we were doing it. But yeah, I had no idea she even had an IRA. So it's like, you need to involve your CPA in this kind of decision making so that we can get out, we can help you legally not pay tax.
That's a great story. And that gives me a lot of years now to procrastinate doing more planning.
Yeah. Don't procrastinate. Don't procrastinate. I about died when she told me there was 2 million. I was like, what? Because there's nothing I would need each year because she wasn't putting anything in it. So for tax prep, I didn't need anything. So how would I have ever known that she had that much sitting there? And we could have totally been taking advantage of it.
And that's why it's important, all the viewers and listeners, to make sure you cover all your bases. You talk to your CPA.
Yep. That knows what they're
That's
doing.
crazy.
You have to have a CPA that knows what they're doing. Yeah.
I've had CPAs who, I mean, after speaking with you, I'm like, I don't know if they knew what they were doing. Looking back